Good afternoon. This is Snapshot Thursday. And yesterday we had non-farm payrolls, meaning how many jobs were created in the month of June. The number was 147,000, which is not a bad number for the economy, and it speaks of an economy that is still strong. And we see here how we've going all the way back to the 80s and the 70s here, how the cycle goes into a strong creation of jobs and into weak, and we have the recession periods, which are the green areas here, and we can have the yellow area here, which is where we are in between. 147 is a number that you can say is in between. It's not very strong, and it's also not weak. But there's one thing that is interesting, and that is if you look at the economy as a supertanker with a direction, think of it of 8-9 billion people working, and especially the US economy here, which this is about 340 million people finding jobs, losing their jobs, and so on. And if the economy is strengthening, we will normally see that the MACD here is moving up. That is the time, that's what we see here. And at some point, sometimes we see how it crosses below this line. We see the blue line crossing below here, 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 and you can see all the yellow areas here, where it's actually crossing below. This is time where we see the economy is weakening. And we actually got that signal here in January of 23. And if you go back in time, all these events have led to a recession. So why don't we see a recession this time around at this point, even though it's quite clear we have a crossover and we even see the weakening continuing? Well, when we look at the GDP number, then it adds up of different components: consumption, investments, private investments, and public investments, or consumption, public consumption, and net exports. And one thing that is jumping out to everyone here will be what we see right here, going back to after Corona. The US fiscal expenditure, which is the public consumption, is actually moving up quite strongly and has stayed here for quite some time. And actually, if we look at it, the US economy would have been close to a recession, or actually all the way 23 would have been in a recession if it was not for this kind of level for the US fiscal expenditure. So something is not right, as it seems, even though we get a very nice number here in between on the non-farm payrolls, and we have seen this crossover. All this is very much driven by what we see of fiscal expenditure from the public administration, and that is not a good sign for an economy that needs to be driven by private job creation, investments, and the likes. So it'll be interesting to see what's happening here in the coming months ahead. The weakness that we see here momentum-wise, will it bring the NFP numbers lower, and may they drop it to the red area where we might see a recession? I think at least there is a risk of that if we look at this, no matter how much they will try to spend, because we also know that public expenditures might turn into inflation. So there are a lot of things that can be said about the non-farm payrolls. For now, on the surface, it looks strong, but the economy seems to be only staying above water because of the strong fiscal expenditure we see from the US administration. That's all for this time, and I'll be back next.